conference will now be recorded.
All right, good day, everyone. I am Steve Szymanski on behalf of Wealth Foundations Northwest. I'd like to welcome you all to the weekly prepper, getting you ready for the week of February 2nd. Just a quick reminder, your trades are yours, not ours. We don't act as advisors in any way. All right, doing pretty much a normal schedule, I think, as far as the eye can see. This is relevant. This is now that we're starting a new month, I kind of wanted just to show you what the S&P 500 has typically done over a long period of time, over almost 100 years, and that February is typically not a strong month, not the weakest, but it is not a terribly strong month usually, and down maybe on average, just pretty close to flat, but down a little bit. And the seasonality chart again, we're kind of looking at this midterm election now, this light blue line, this midterm election year, but January did finish positive, so this is not just barely though. It was pretty flat, but only just a tiny bit positive. So a very flat January as opposed to a down January. Now, anything can happen here, but and that's an example that we were expecting it a little bit more bearishness, didn't get it. Could it mean then that February won't be as good, or could it mean that this whole year will just be better than expected? Don't know yet, but the economy is still humming along at 4.4%, and so we shall see. Now, the last week the FOMC left rates unchanged, like everybody knew. Warsh will be the new Fed chairman. They say he's a hawk in general, but he might be a dove in the short term, meaning that he might be a little bit more open to rate cuts in the short term. Metals took a breather, definitely took a breather. I was waiting for some kind of a pullback. Some people are taking it as an opportunity to buy more, but they definitely finished the week fairly weak, and oil was the strongest by far. And the oil prices have usually been hanging out in the high 50s, low 60s per barrel, and saw them up above 65 for the first time in a long time last week. Earnings were a mixed bag. Microsoft, Tesla were down. IBM and Meta were up. Apple was kind of flat. I might be interested in starting the Apple position for the long haul. So for the week, the Qs were worse than the SPY, but not by much. It was the Russell and gold and Bitcoin that really got hit the hardest. So not a great week for the end of Jan. And so getting ready to kick off a new month. Now, anytime you have a new month, you can get a change of tone. The markets right now look pretty mixed and flat, so kind of too early to tell. But for the one-day performance, you can see that the consumer defensive types of things were outperforming for the day, and basic materials, technology, financials all took a backseat. For the week, energy was the strongest, communication service, utilities, consumer defensive. So these defensive sectors last week seem to have outperformed. If you look at the 1 week, the heat map for 1 week, and see, there were some software companies really got hammered. Oracle, Palantir, Microsoft, Synopsys got hit really hard. So that area of technology was the worst. Semiconductor still pretty strong, with the exception of AMD. So keep an eye for NVIDIA, Avgo, those types of companies. Google, Meta, Apple, all fine for the week, and you can see the relative strength in energy. But overall, the market's not a lot of weak points. Again, software seems to be this type of software infrastructure, and application software seem to be very weak. And certain parts of healthcare, it looks like the healthcare providers are weaker than the drug companies. Okay, so there are subsectors within sectors, and that's relevant. So the market's in balance. And so you can trade from the top to the bottom and bottom to the top if you want, but mostly we're just waiting for a breakout, aren't we? Defensive sectors showing relative strength. Watch to see if all the sectors start to align directionally. So far, it's been a rotating market, shifting back and forth from one sector to another sector. Some are always hot, some are always weak. And what we're looking for is if more sectors can be aligned with the weighted sectors, and see if things get incredibly bullish or incredibly bearish. And so far, we're not seeing that for months. We're pretty much where we were in October. So watch to see if that range is broken. If it is, you can go with that generally. If that fails, then you don't. But trade conservatively while within the range. Okay, and just because it could break either, it will eventually break one way or the other. Is the U.S. dollar a dead cat bounce? So the U.S. dollar kind of looked like it's just been in a downtrend. Okay, it's been trending down, and it popped a little bit. It popped a little bit, and that's part of what caused the gold trade to get pretty rough. And it could have had to do with the change in the Fed chairman or something like that. But it's the reason why the dollar popped. But was that a temporary little blip or not? Because it's going to be a while before we have another rate change. Okay, possible market movers. We've got ISM manufacturing and non-manufacturing on Wednesday. JOLTS report on Tuesday. These are not huge market movers. Jobless claims is more business as usual type thing, but jobless claims numbers have been consistently coming in fairly low, right around 200K, a little bit above 200K. Probably one of the biggest market movers news-wise is going to be the non-farm payrolls on Friday. That'll probably be the biggest one, along with some key earnings reports: Amazon, Google, AMD, Disney. So those are the some of the things to really watch out for. So in general, the more defensive sectors should be the strongest going forward. If that recent trend kind of continues, moderate will be the things like healthcare, utilities, and real estate. And so we're seeing and expecting to see weakness in some of the weighted sectors, and some of the biggest sectors out there are XLK, XLF, and XLV. And so the indexes may not be looking good, but there will be plenty of stocks that'll be up probably if this mixed bag kind of a market continues. Okay, so let's see what kind of trades we can look at, and look at our overall portfolio, which is doing very well on the year. But Dell, let's look at them individually. Dell is it's a put horizontal spread. Put horizontal spread. So let's check that out. As the market's opening now, we can kind of see where we are at on this. And so yeah, it's not as bearish as we'd like, but it's certainly not broken. The 20 SMA is still in play. So we'll just continue to hold that trade, and watch for this short value to get small enough where we can think about rolling it. 61 cents is plenty of, if it expires this coming Friday, and I'll take that $61. So let's just leave that in place. And so no change required to that trade. Gold, our gold trade got hit pretty hard, but it is a spread. So the way we're playing gold, we wanted it to stay above 450, right? Stay above 450. And did it drop below that? And so the answer is yes, it did. These two big bad candles here were pretty rough for us, but now you're getting a little capitulation here. So don't know if gold is going to find itself in this area or not. Had we known that this double drop off was going to happen, I probably would have closed. So we were perfectly safe all the way to down here. So it doesn't have to rise much more between now and March for us to get max profit on that spread. We could even consider rolling it. I'll look at this during the week. We could consider rolling that short down and in, which I don't normally do. But if it helps us cash flow a little bit more, instead of waiting for it to just waiting a month for it to go, a month to really 6 weeks. It has 6 weeks to get above 450 for us to get that max profit. So I think gold is a wait and see right now. Let's not do anything on that at the moment. But it's definitely a winning trade. Definitely a winning trade. Don't get me wrong. But it is. We should be looking, if that gets back above 450, we might head for the exits and not wait around to see what happens. Semiconductor is, we're just long out to April, and deciding what we want to do on SMH. It has been strong, getting a nice little bounce off of the 20 SMA. I think we're going to let that bounce here for a little bit, and I'm going to be thinking about. It's really a boing boing. You could take it as a boing boing trade if you wanted to. If you weren't already in it too much, you could. But I'm going to let this bounce maybe another day or two, and then look to sell shorts up around that 420 level. But this one is looking excellent. SMH and Spotify. Spotify we're kind of bearish, relatively bearish on this 510, 490. But so we ideally want this to go below 490 before the end of March. And it popped a little bit today, but it didn't go above Friday's high. So I'm going to still count that as a continuation for now. We'll keep an eye on it. If Spotify puts in a bottom, then we'll kill this trade for sure. All right, or change it into something else. So XBI is the biotech ETF. We just want this to go below 125 for us to get max profit here. Let's see how we're doing and see if it's broken or not. XBI. Okay. So wait a minute. This must be a bull put. I'm sorry. This must be a bull put. So we're short the 125 and long the 130. I'm in the wrong trade. This was a mistake. We should not be in a bear put on this. I don't know why we're in a bear put. This should be a bull put. The 130 should be short, and the 125 should be long. I just put no. That's right. That's right. I'm getting out here because this is too bullish to be bearish. I'm not sure why I'm in a bearish trade on XBI. Did I put that symbol right? Sometimes I screw up the symbol. XBI. Nope. I'm going to kill this trade. I don't know why I'm in a bearish trade, and we're up about $16 overall. But oh, this maybe it started out as a boing boing. Maybe it started out as a boing boing, something like that. I don't know. I'm going to kill it. So create closing order and get the best fill that I can. Confirm and send and send. Yeah, I'm getting out of that. I should have no business being in a bear trade on something that bullish, and it pulled back. So I'm going to take that opportunity to close that at a tiny profit. Okay. And then here is our horizontal spread. It's really a calendar spread on healthcare XLV. So that short is marking about 81 cents. So it's got about $243 worth of value left. So let's take a look at how XLV is doing. XLV. And it's holding up nicely. It's not, super bullish or bearish, but it is holding up. And as long as we can continue to cash flow, then we'll be fine. So it's got kind of a triple bottom, sort of unusual. So I'll be looking at this one with side eye, but this bounce is a welcome bounce for us to get closer to 160. If we what we're hoping will happen is over time, at least between now and March, we come back up here and retest this 160 area or so. So we just needed to hang in there, come back to the other side of the range. So this is one of those range-bound types of trades we were looking at. Let's look at Netflix. Netflix is this could be setting up nicely as a bear put spread because you can see that the bearish trend is still intact. But is this again gearing up to put in a bottom? So I'm not sold on this one. You could do it as let's do it as a boing boing. We could do this one as a boing boing. See, you've got the 2-day RSI and you've got clear downward momentum. Let's take it as a boing boing. Let's do a Netflix boing boing. So let's go to trade and go out to March, which is 39 days. No, that's March 13. Let's go to March 20, 46 days out. And we'll look to buy a put 35 to 45 delta. And the 85, 35 to 45, we could do the 83 or 84, either of those. Let's go with the cheaper one and do two of them. Let's take the 83, two of those, and We'll go ahead and take that we'll just take it at the natural because it's a very tight spread. Sundance said, I like trading Boeing wings on things that are good tight spreads. So I think that's enough for now. Let's go ahead and see how the rest of the market plays out, and we will go from there. On behalf of Wealth Foundations, it's been my pleasure to have been your coach today. Good luck in trading, everyone. Take care. Bye-bye.